Hello everyone, welcome to the channel, the Stock Whisperer. Today we are going to see about the Carraro India IPO analysis. We are going to see this Carraro India company we can able to buy or sell. We are going to see the detailed insights about the company. First we can go with the company overview. Company is established in 1997. Carraro India specializes in axles, transmissions and gears for agricultural tractors and construction vehicles. So this IPO price band is from the minimum from 668 and to 704 is maximum price per share. And we need to, if you want to purchase, we need the demat account, and as well as for lots only we can able to purchase. So each lot means they will define like quantity of shares like 30, 50. So we need to purchase based on the number of lots. We cannot purchase individual shares. You need to remember in the IPO whenever you are purchasing. Subscription period is starting from December 22, December 24. So December 22-24 means it could be the Saturday, Sundays are falling as well. So you need to think about that as well. Okay, come to the financial performance of 2022 to 24. So last 3 years, how the company is performed. I just aggregated the statistics. So revenue is financial year 22, it was 1,498, and financial year 23, it was 1,713, and financial year 24, current financial year, it is 1,789. And profit after tax, financial year 22, it's 22 crore, financial year 23, 49, and financial year 24, 63. That means profit means it's after the expenses, everything, how much the profit is earned. So based upon the revenue, the CAGR, compound annual growth rate, is 9.3%. It looks good. Basically, each company, whenever the company is CAGR rate is around 10%, it's a good growing company in my perspective. And profit after tax is as well, CAGR is compound annual growth rate is 69%. So it's very impressive on the profit after tax as well. And year on year, they are performing well. And return on equity and ROCE, the company employed, return on company employed, both is performing good. Return on equity, it is 13.7%. So 13.7% means in the compound interest calculator, if you place the 1 lakh, so today you are going to invest 1 lakh in this company, you are going to in 10 years the same performance. If the average performance of the 13.7% if the company is achieving, then you will get the 3,61,081 rupees. You will get that as a after 10 years if you are invested in 1 lakh in this company. So total return is 261%. If the company is same performing for the next 10 years. Come to this financial performance again. So ROCE, that means the return on company employed as well, it is 15%. It looks good as well. Next, come to the valuation matrix. This is important. Why means so whenever one share we are going to purchase, we need to think about the valuations. So based upon the upper price band and their revenue, profits, and as well as the revenue based upon that calculated, the two figures is important. One is price to earnings, P by E ratio, and price to book, P by B ratio. So P by E ratio is 45.8. So it is, I think it is huge, because usually whichever the company having the nearby the 18x is a price P by E ratio with the 18x, then that company could be a good valuation. But I think this company is overvalued at the moment. But sometimes these companies we need to compare with this in the same sector with the other companies. So then only we can able to conclude this price to earnings is good or not. Price to book ratio as well 9.6 9.6x. It looks as well it is overvalued. Usually the price to book ratio should be 1 or maximum 10. So 1 means it's equally valued, less than 1 means it's undervalued, above 1 means it's overvalued. So 9.6 means it's already overvalued based upon the book value as well. Okay, we can compare with this same peer comparison, same sectors. What are the other companies? How much the P/E ratio, those kind of things. The first one is Escorts Kubota Limited. This is a P/E ratio of 43. It's also similar, same kind of level, this company as well. Next one is Carraro India. This is 74. I think comparing to this company, it is less P/E ratio. Ramakrishna Forgings Limited and Sona BL Precision Forging Limited. So this P/E ratio is high. So when I seeing this peer comparison, what I'm thinking is, so this sector P/E ratio is average is look like around 40 to 50 on that range only then. So that's why this company as well, it's listed in the same price. Okay, let's see the strength and weaknesses. Strengths. Established clients. So they have a Mahindra, Ace, Volvo, TAFE, CNH Industrials. The main clients are it's a good clients for this industry. Basically, they are agricultural and agricultural tractors and company tractors only they are providing. And market position in the world's largest tractor market. So they have the largest tractor market as well they are having. Weakness, what we are seeing as a weakness, revenue concentration. Okay, 80%, 85% of revenue from the top 10 customers in financial year 24. This is a main thing. If 10 customers only generating 85% of revenue, then it is comparatively it is a riskier, because if one of the client is drop off, then automatically the revenue will be reduced. Seasonality due to reliance on agriculture sector. Yes, that's correct, because they are only manufacturing the agricultural tractors, so they are only relying on the agricultural sector. So that's an important factor as well. Growth prospect. What's the next long-term goal for this? So this company, how growth would be there in the future? Infrastructure development driving demands for construction vehicles. Yeah, in the future, the construction vehicles having the more demand. So maybe they do not only need to support the agricultural sector, and they can able to construction vehicle as well. They can able to start grow the revenue. India's large tractor market offers significant opportunities. So yeah, India is usually the agriculture land. So they having the large tractor market already. So I think its growth as well, it's good in the next few years. So consideration, what's the main issues is I already addressed. One of the thing is valuation concerns. The P/E ratio of 45.8x suggests a premium valuation. Yes, because it's a overvalued stock. So it will be riskier. And competitive landscape with established domestic and international players. Yes, there are already a lot of players in the market. So very competitive situation here. So conclusion, what's my conclusion about? The Carraro India demonstrates strong financial growth and leading position in the tractor and construction vehicle component market. Yes, that's true. And potential investors should weigh premium valuation and inherent risk carefully. So from my perspective, this company is overvalued. So we need to wait for the right moment to buy. If you want to go for the long-term things, you can wait for the moment. If you want a short term, you can buy, and whenever you want, you can sell it. Because I think right now the market is growing, but this is overvalued stock for the long-term buyers. Long-term buyers, I say no. For the short-term buyers, I say yes. So based upon your risk level, and how much you can invest. Based upon that, you can pick. I think that's my view from this perspective. So if you have any questions, please post in the comments. And if you like this video, like it and subscribe it. Thank you.